Hi everyone, Friday, September 9th. Welcome to Three Things with Spyglass Lending, where every Friday we delve a little deeper into the mortgage industry, what's going on behind the scenes, right? Not the usual rigmarole that you hear, but some really good granular information. Let's get right to it. What's behind me on the board? HPSI, Fannie Mae's Home Purchase Sentiment Index. Yeah, that exactly tells you what's going on, how sellers and buyers feel about the market, and this is showing you what's going on between essentially July and August of 2022. The down arrow, the sellers, they're not feeling as good as they were about the market. Obviously, things have softened, things have changed. But what might be surprising is that buyers feel a little bit better about the market between July and August. There was actually an uptick about buyers feeling better. Now, let's put that in perspective. Those that feel better about it are still below 20%, and those that feel bad about it are still well over 70%. It just went from the high 70s kind of to the low 70s. Again, I get this question asked all the time. Is it a good time to buy? Well, it depends how you look at it, right? I think there are a lot of buyers out there who are saying, hey, the market's softening or it's going to crash. Well, those who have been waiting for the crash for over 10 years have been sorely disappointed. So is it really going to crash? Who knows? Maybe they're right into next year. But the other problem, again, here we are at close to a 6% interest rate for a 30-year. That's now the average, right? For those of you who think that it's going to go back down, or listen to, again, Fannie Mae saying, hey, we're going to go back down to 4.5% next year, maybe, well then sure, if prices go down and the rate goes down, maybe you do want to wait. But what if we go the other way? It's gone up so much in 6 or 8 months. What if we do hit 7, 8, 9%? Well, those who waited on the sideline when they could have had in the 5% or close to 6% money, all of a sudden they're paying 7 or 8 or 9%. Even if the market softens, it better have softened a lot if they're waiting, or can even afford to do that at that point. Again, if they're going to get qualified in the 7, 8, 9% range. So always that big question. I'm not sure if it's the right thing to wait, but you're going to have to determine that for yourself. Number 2, tappable equity, 5% down arrow. Well, I don't think there's any surprise here as well, but this is the first time since 2019 that you're seeing a back-to-back month, again, July, August, that has decreased in tappable equity. This is big. Look, refinances have kind of been a thing of the past for quite some time now, over 6 months, right? When the rates were 2.75, 3%, everybody who can do it was out there rushing to get refinanced. Well, as they've gone up, 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 and up, refis have gone down like just ridiculous amount, right? Me as a loan officer, mortgage brokers, they'll tell you refis are the thing of the past. But home equity lines of credit, well, they're making a big comeback because so many people saw major bounces in their equity over the past couple of years. So if you have a good first position lien in place, if you already got that refinance, if you got that 2.5, 3%, 3.5% loan, you don't want to touch it. But if you need the money, you're looking to take a home equity line of credit behind it. Except the market really is softening because that tappable equity has gone down 5%. We'll see how much further it's got to go. And last here, these are the big numbers here. This just came out this week, actually. The conforming loan amount, we're going to get into explain this is what it is in a second, but it was at $647,200, which is a huge jump from the $417,000 it was just a few years ago, and it has since been released as starting in 2023, the new conforming loan amount is $715,000. Again, sizable jump, and that's still saying, hey, we have enough equity where the banks and all the lenders are feeling comfortable enough to say it's $715,000. In fact, all the lenders are really already honoring this. It's only early September. This won't come out until January, but they're already honoring it. What they're not yet honoring is high balance conforming. Let's talk about that for a second. So in certain areas of this country, California included, where I live, Los Angeles, yeah, home price is obviously so much higher than so many other places. So there's this other segment before you hit the jumbo market, what's known as high balance conforming. Right now, that's around $970,000. We're all expecting it to jump over $1 million. If the conforming loan amount has jumped from, $647, close to $650 to $715,000, then the high balance conforming, which is currently $970, should jump over $1 million with the expectation that the equity is going to hold, or enough equity, because it's skyrocketed so much in the past couple of years, right, will hold that they can still maintain that type of conforming loan amount or high balance conforming loan amount before you get into jumbo. Thank you for joining me today. This has been Three Things with Spyglass Lending. We'll do it again next Friday.